Hello, this is Kahlil Adam, head investor at Itaú Private Bank, and I would like to thank you for joining us once again, this time for the first of our monthly international market update videos for 2024. I'd like to start by wishing you all a Happy New Year and thank you for trusting Itaú as one of your investment partners last year. Equities ended 2023 on a high note. The S&P rallied 4.5% in December, delivering over 24% positive returns for full year 2023. We've seen further follow through this year with the S&P up already over 2.5% month to date, reaching its all-time high and quickly approaching 4,900 points. The focus of my recent videos has been on the hard versus soft landing debate, and data has been increasingly supportive of a soft landing, which is now the base case for equity investors. Inflation numbers have been steady with the CPI around 3%, and core data, which, while sticky, has moderated slowly and is currently at 3.9%, which is the lowest level since May 2021. We're not out of the woods yet for inflation, given data is still short of the Fed's goal of 2%, but it appears very clear that the trend of disinflation has opened the door to talks with the Fed cutting rates in 2024. Which leads me to the second component of the hard versus soft landing discussion, which is growth. Economic activity has remained resilient despite the Fed raising over 500 basis points this rate tightening cycle. GDP numbers remain stronger than expected, with third quarter printing 4.9% and the first estimates for Q4 at 3.3%, well ahead of forecasts. More importantly has been the resiliency of the consumer. Michigan Consumer Confidence Index rebounded in January to 78.8, which is the highest level in over 2.5 years and has been quite supportive, as reflective of retail sales, which exceeded estimates in December, coming in at 0.6%. The key is the job market, which has remained stronger and more resilient than expected, with unemployment near cycle lows at 3.7% and continuing claims remaining steady, confirming that the short-term outlook for the job market in the U.S. is robust. Consumption is the main driver of the U.S. economy, representing about 2/3 of GDP, and all of this is to say that it appears that inflation is contained and the Fed was able to contain it without severely damaging the job market, at least thus far. So, at the risk of calling this debate in favor of the soft landing camp too early, I'll end by saying that it does appear that the soft landing camp is winning, and handily at that. The focus has now turned to when the first rate cut will come in 2024, which according to market consensus sits at roughly a 50% probability for March, but essentially a certainty by June. The 10-year Treasury has rallied since November, coming in from their high of 4.33% to 3.8% in December, and now sits at around 4.10%. And the equity market, as mentioned earlier, has remained quite buoyant. So we'll continue to monitor the data, but I wanted to thank you as always for tuning in and say that I look forward to seeing you next month.